So I have a bit of an emergency video for you guys. We did get some pretty bad news for Nvidia that, well, someone knew ahead of time. As you can see here via the Nancy Pelosi Stock Tracker X account, this is sickening if you are an investor or trader in this market. It says that the DOJ has officially sent Nvidia a subpoena regarding its antitrust investigation. The stock was down over 9% on the day, and Bloomberg decided to drop this bombshell story today, 24 minutes after markets closed. Somebody had to know. Following this report, Nvidia is continuing to sell off, now with the biggest drop in market cap value in the history of the stock market. You're down another 3.1% in after hours. This is probably going to set tomorrow up to be a pretty rough day as well. The S&P 500 is already down almost 0.5%. This article here from investors.com says Nvidia keeps falling late as DOJ reportedly issues subpoenas in AI antitrust probe. The Justice Department reportedly has issued subpoenas to Nvidia and other companies as it probes concerns that the AI chip giant is exploiting its dominance in artificial intelligence. Nvidia stock fell slightly overnight after plunging in Tuesday's regular session, and I guess a 3% decline is Nvidia falling slightly after it fell over 9% in regular trading, but I wouldn't say 3+%. At one point, it was around 4% in overnight trading is a small amount. It goes on to say the DOJ, which previously sent questionnaires, has not sent subpoenas requiring that Nvidia and other recipients provide information. Bloomberg reported late Tuesday, citing sources. It's another move towards a formal antitrust complaint. Antitrust officials worry that Nvidia is making it hard for customers to switch to rival suppliers and punish those that don't only use its AI chips. The DOJ probe includes Nvidia's planned acquisition of Run AI, which makes software for managing AI computing. So this is obviously a problem. If Nvidia is deemed a monopoly of sorts, it's not going to be good. Now, typically, Wall Street doesn't react to these antitrust probes in the longer term sense. For a day or two, markets tend to freak out over these reports, but antitrust cases can take years. Look at Google. They've been in an antitrust case for literally years, and you still don't have a final decision. So nothing is really going to happen in the very immediate term. I think there's actually other issues that are at play with Nvidia and the broader markets. First and foremost, for Nvidia specifically, I do think Wall Street's looking ahead at this point to 2025, and they're saying, you know, what are growth rates going to look like in 2025? What are the probabilities that Nvidia has another just knock your socks off year? And what are the odds that growth actually accelerates in 2025? And I think any logical person would say the law of large numbers probably is not going to work in favor of Nvidia. For context, Nvidia is going to have to put up, you know, $40-50 billion of revenue a quarter by Q2, Q3 of next year just to have impressive year-over-year growth. What are the odds that that happens? It becomes lower and lower. So if you're thinking about the Fed cutting rates, if you're thinking about where to invest your money, where maybe has priced in really optimistic scenarios, you come to Nvidia that is basically priced for perfection. Not as much anymore. I will give it that. Nvidia at $104 per share is not too bad in a sense, as long as things do go well and growth goes well and there's no AI slowdown. But again, there's a risk of that. And if that happens, then Nvidia is still expensive at current prices. And I think that's the real issue that Wall Street is grappling with when it comes to Nvidia. I don't think anyone really thinks that Nvidia is going to get in trouble because of this antitrust suit that is coming their way. I think everyone knows they're going to win that. The Motley Fool had their own take on what happened today with Nvidia stock. This article was posted at 2:45 p.m. And, you know, let's be honest, Wall Street knew that this antitrust subpoena was coming. And that's just how shady Wall Street is. Like, your major banks, JP Morgan, Bank of America, Citi, Wells Fargo, like, they knew this was coming. That's a fact at this point, okay? If that's not blatant insider information, I don't know what else is, okay? They knew. They got out when they had a chance. It's Wall Street is the most brutal place where nobody gets actively killed or injured. I mean, Wall Street's probably more brutal than a battlefield when it comes down to it. It is you versus everyone else. And yeah, retail is not advantaged in this market. I mean, whether it's government reports like the revision to the payrolls, we don't get that stuff. Banks got it like 30 minutes before retail. And yet again, with something that is this large for markets, Nvidia, big money got the news before we did. But nonetheless, the Motley Fool says that investors feel jittery about this week's jobs report. We'll talk about that in just a moment. But concerns that China will invade Taiwan hit chip stocks again. It says, in an interview on Sunday, Taiwanese President Ching-te said that China should also move to reclaim land from Russia if it wants to officially make Taiwan its territory, rather than suggesting that China should take back Russian land that used to be within its own borders. Li was making a statement about whether the Chinese government was being logically consistent in some of its stated reasons for plans to exert greater control over Taiwan. Nevertheless, it looks like the comments from Taiwan's president are highlighting the risk that China could invade Taiwan at some point in the not too distant future. You know, Wall Street prices things out ahead of time, but not years or, 5-10 years, which is probably more like a realistic timeline for any Chinese Taiwan invasion, in my personal opinion. I mean, we're going to see it coming months before it happens at the bare minimum. And it, from what we can see, it doesn't look like there's preparations for that. Wall Street, they're not going to price that in. So that's not what is affecting Nvidia. I think, again, it's more that 2024 was just such a strong year. We pulled forward a lot of demand for GPUs, for these, servers, server racks, basically anything that has to do with AI, invested capital. I mean, you pulled forward everything that had to do with AI. 2025 is not going to look as strong. And if the Fed is cutting rates, there's a lot of other stocks out there that are going to benefit a lot more than your AI stocks and become more attractive at that point. I think that's what is really hitting these semiconductors as we now are entering into the fall. And of course, the antitrust probe here, the news that we got in after hours, did not help things at all. But I don't even think that is the main concern, I guess, over the next couple of days. For a day or two, markets are going to freak out over that. But if Nvidia keeps selling off, if these stocks do not recover like they typically do right away, it's concerns about 2025, potentially concerns about a recessionary environment. Now, here's where I have some other concerns, okay? Wall Street gets the data before we do. They get the news before we do. You can see that with Nvidia's news that came out today. I'll be damned if you think nobody knew that was coming. Nvidia down 9%. Antitrust news comes out almost 30 minutes after the bell closes, or the markets close and the bell rings. Like, that was clearly information that big money had that we did not. Okay, that was essentially leaked to big money investors. Why? Well, the government, or probably just the government, believes that those institutions, they can't afford to have a major problem. They can't afford to not be in the know of what's going on with Nvidia. They would rather screw retail and help out big money, because then you're in a financial stability crisis if the wrong hedge fund or institution had the wrong position on Nvidia and gets blindsided by this big news. Long story short, they're probably getting leaked the data for everything else. They're getting all of the government data reports. They're getting everything before it comes out. And judging off of what we've seen today, I do think a lot of what we've seen was also growth concerns. I think it's one part Nvidia, the lapse in year over year growth that's going to be not as impressive in 2025. The Fed that's going to start cutting rates, which is not ideal for big tech. But I also think some of the broader market selling has to do with the data that hedge funds and institutions already have that comes out this week. The first data point that we get from here will be tomorrow morning, and that is JOLTS job openings. Now, JOLTS job openings, you want to see them really come in line with expectations. If you see a big fall, that's a sign of economic weakness. Okay, you don't want to see a big fall. You don't really want to see a huge increase, although that would be better than a big fall at this point. Because you want as many jobs open as possible. You want as many businesses looking to hire as possible. Because if you're looking to hire employees, that means you're probably far from firing employees. Okay, that's kind of the simplest way to think about it. Judging off of what we've seen in markets today, I'll just be honest with you guys, like between us, because I think you deserve to know this. Wall Street has the data. That's the bottom line. We are not getting the data at the same time as everyone else on Wall Street. You want to pay very close attention to the next couple of days and how markets trade, really heading into tomorrow. Because again, if that JOLTS number comes in low, that's going to be another reaffirmation that Wall Street's just getting the big data, or big money's getting the big data, even government data, before we do. And the problem is this Friday's data is critically important. Now, if the non-farm payroll report is bad and big money knows that, you're not just going to freak out and sell off, 10% in a day. But could you sell off 2% for 3 days? Could you price some of that risk in ahead of time? Yes. And that could be what is happening right now. It wouldn't surprise me if even, tomorrow's another negative 2% day. It wouldn't surprise me if Thursday's another negative 2% day. And it wouldn't surprise me if Friday's negative like 3 or 4%. If the non-farm report is low and the unemployment rate does move higher. And, if you see a big jump in the unemployment rate, you're kind of going to have a heads up on that based on how stocks trade over the next 2 days from now up until Friday. If we just sell off into Friday, you kind of already know that jobs report's going to be really bad. And if you guys want my honest opinion, I'm just pissed off. Deeply pissed off, because it's like, fuck retail investors. They don't matter. They can lose all their money. They can get screwed on a drop of a dime. The only thing that matters apparently is institutional investors, is making sure the next hedge fund does not blow up, making sure the next market maker stays liquid. And I think that's really what part of this is, making sure market makers and big liquid investors do not get blown up. Because if that happens, then you have a financial stability problem, and you're basically guaranteed to have a recession at that point. Does the government want that? Probably not in an election year. Does anyone really want that? Probably not, especially in an election year. So from this perspective, again, how do we counteract that? Well, acknowledging the problem is number one, that Wall Street is getting all of the data and information before we do. Like, that's happening. That is actually happening. The JOLTS numbers, they got that today. Just like Powell gets data a day or two before it's released, it's also being sent to your major banks, and it's getting passed down the chain from there to whoever Jamie Dimon and other CEOs want to know that information. Okay. The way that we can counteract this, besides just recognizing that this is happening, is paying attention to the money. Okay, if we bounce back hard tomorrow, if the data comes in really good, then this video is bullshit. Okay, maybe they don't get the data, which is kind of hard to fathom that as a possibility after what we've seen over the past couple of weeks. So I think tomorrow will tell us a lot about this. And then heading into Friday, because I don't care about tomorrow's data, really, in the grand scope of things. I care about that unemployment rate and the non-farm payrolls. But if that data is bad tomorrow, stocks continue to sell off, there's a really good chance that that non-farm payroll report is going to be bad on Friday. And I think you can take cues from the markets and how we trade up until Friday and trade and invest accordingly. Okay. Even Tom Lee just got bearish today, which was kind of a blind side. Okay. These are my thoughts. The best thing you can do right now is have some hedges on your portfolio, in my personal opinion. You don't want to get too crazy with this. Small hedges can go a long way. If you guys want to come join the trading community, get access to all the trades that I am making in real time, check that link out down below in the description of this video. But you're still sitting near all-time highs. And if things do get bad and there is a deeper slowdown and there is more recession fears, we could fall a lot more from here, like substantially further from here. And I do not think by any means it is too late to hedge. In fact, I think now is probably a better time to hedge than before, because what we got today basically confirmed that Wall Street knows the data before we do. They get it before we do. So that does give us an edge as well if we can recognize that and start to read the tape. That just means read the markets and what money is doing and where money is flowing. And we can best position for what is next, which I think tomorrow is going to tell us a lot about the Friday jobs report. And then I think Thursday is going to tell us a lot about the Friday jobs report as well. Besides that, I think cash is king. You can see down here, I have $30,500 ready to go, ready to buy the dip if that dip does come. But I'm only going to buy the dip if things are okay, right? If we continue to get more recession fears and it looks like we're going into a recession anytime in the near term future, I will not be buying the dip right away. Like markets can fall 10, 15%, then I'll start nibbling. And unfortunately, that may be where we are. I know I was bullish for September, and I think you can still be bullish for September if that jobs report comes in good. But from what we've seen today, this was not all just NVIDIA. It wasn't. It wasn't all just big tech or AI stocks. Everything sold off, besides some select value stocks or stocks trading at 5-10-year lows that pay 4 or 5% dividends. Those were the stocks that did well. Those are very defensive in nature, recessionary defensive. So those are my thoughts. Let me know what you think down below in the comment section. I really wanted to share this with you as soon as possible because I'm pissed off. And the quicker we can recognize what's happening, the better we can read the tape, better we can position ourselves for it. So let me know, again, what you think about this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day or night, and I will see you in the next one.